So what's the charge for having a manager do all this work for me? Well, the range tends to be no more than about 5% tops, but what I've seen on average is more around 2%. The management expense ratio, or MER, for this fund is 1.21%, with the addition of a management fee of 0.95%. So as I said, around 2%. What sort of stocks is Lakeview holding on to? What are their top holdings? So the current top holdings, they only displayed 9, not 10. Because it's the most recent update, I decided to go with the globefund.com results. So at number 1 we have Baytex Energy Trust, West Shore Terminals Inc. Fund, Crescent Point Fund, RioCan Real Estate Investment, Penn West Energy Trust, Bonavista Energy Trust, Inter Pipeline Fund, Genworth MI Canada, and Pembina Pipeline Income Fund. Glad I got that out. In terms of the distribution of the money in the fund, about 63.7% are in stocks, 31.96% in bonds, and 4.34% in cash. The transferability of this fund. Transferability refers to your ability to transfer your units from one fund to another fund that's managed by the same company. So under Lakeview, they actually have 3 different types of funds. They have the High Income Fund, which I'm recommending, Canadian Equity, and American Equity. So if you look into the 3, you have the ability to transfer those units. So if you bought 100 units, you could say to the financial advisor, I'd like to take 50 of those units and transfer it into the Canadian Equity. This is useful to the average investor because if they decide they want to try a different fund in hopes of better performance, or maybe the current fund they're in is doing poorly and they want to try and protect their portfolio by going to something a little more stable, this option is useful and caters to those types of people. So what type of a load can you choose with this fund? Well, there's 2 options you can choose. You can have a front load or a back load. They refer to it as a initial sales charge or deferred sales charge. Considering this investor, he's not really looking to capitalize right away, so I would suggest the deferral sales charge, because what they do is you have an initial percentage that you pay as soon as you sell, but that goes and starts to decline over years. If he were to hold on to the fund for over 7 years, that commission or load becomes 0%. He doesn't have to pay it anymore because, I suppose, loyalty. Ideally, when you're young, you want to invest for long term and think about your retirement. So this is the best choice for someone like Chris. So how would you go about buying this fund? And can you set up something where you're regularly putting in small increments? In order to buy this fund, you actually have to contact sales and marketing of Lakeview. They have a phone number provided on their website, as well as an email address where you can email them and contact them. If you're intending to buy units in this fund, then they can send you a web logon ID where you can sign up on Investor Online, and they'll give you the opportunity to do all your investments online. To buy into the fund, you need to contact Lakeview personally, either with their phone number provided on their website or the email address provided on their website. You would contact sales and marketing, and you'd negotiate buying into the fund there. After you've bought into the fund, you can go and they'll give you a web logon ID, so you can log in to Investor Online, which allows you to access daily account balance, transaction history, statements, confirmations of transactions, and tax receipts. This allows you to view your investment online 24/7 free of charge. In terms of being able to make regular payments into your investment, they actually have a pre-authorized checking plan. What this does is it allows you to make regular automatic investments into one or more of the funds that they manage, and you can pay into these weekly, bi-weekly, monthly, bi-monthly, quarterly, semi-annually, and annually. For Chris, he only makes $4,000 every summer or every year, so he would choose annually and he could put in that $4,000 every year. Just slightly off topic, if you've read The Wealthy Barber, you've heard of the 10% solution, and you've also heard of the rule within that called paying yourself first. What this tool allows you to do is automatically follow that rule, and you don't even have to think about it. It comes directly from your bank account into the mutual fund, and you don't have to worry about it. You won't even know it happened. The difference is with Chris, he's not investing 10%, he would invest all of it. Or maybe not all of it, maybe he'd invest 10%. But with no liabilities, it's really all risk money. So in summary, to find out more about investing in their fund, just contact sales and marketing on their website. Now I can show you, if you look on the computer, how to find the prospectus. They actually have a simplified version, so it's not 100 pages, it's only about 20 pages, but still not worth printing. In addition to just the funds, they also offer other optional services such as RRSPs, LIRAs, LRSPs, RRIFs, LRIFs, LIFs, RESPs, PRIFs, and TFSAs. If you don't know the acronyms, I suggest you look in the prospectus on page 9 for optional services where they'll be defined for you. They also offer a systematic transfer plan, which allows you to change from fund to fund automatically. It's a service you pay for with a minimum of $50 that you'd have to switch around, and it allows you to move from fund to fund. Like I was saying earlier, there may be advantages to that. More information you may want to look into on the prospectus would be page 11, fees and expenses, page 16, dealer compensation, and 17, Canadian federal income tax considerations for investors, as well as your legal rights on page 19. Thanks a lot for listening to me about investing in mutual funds, and I hope you like the mutual fund I chose.